Hey everyone, welcome to Leading Indicator, an investment show by Public.com. With us today are Kriskey, Commodities and Alternative Strategist at Invesco, as well as Steve Kurz. Steve is the Global Head of Asset Management at Galaxy Digital. It's great to have both of you. Thank you both so much for taking the time to talk to me about this relationship here with regards to the recent iterations of spot Bitcoin ETFs. It's been about a month or so since finally at long last we got that approval from the SEC. We've all been waiting for a very long time. Invesco and Galaxy partnered to roll out the Invesco Galaxy Bitcoin ETF. Kathy, let me kick things off with you if I can. Talk to me about your early observations about the demand that we've seen for new spot Bitcoin ETFs like yours.
Thanks so much. And we're so happy to be here because it's really important for Invesco and for Galaxy for us together to get out the importance of our partnership. So it's been a pretty intense month. I was joking that this month lasted for a year, right? January. And we think that, yes, we are seeing demand, but it is a challenging environment because remember, we have a lot of advisors. So just to back up, Invesco, $500 billion in assets, just in ETF assets, and then 15 years ETF experience, right? We have over 400 ETFs globally. Now we're a leader. This is our wheelhouse, if you will. And we knew that the market was asking for these products, right? It's been 10 years and to finally get the SEC's grudging, albeit approval, right? We're out there in the market. But a lot of advisors, right? They are still adding the product to their platform. So, and I would argue that there's a real sort of divide as like the 30-year-olds already in this space. They understand Bitcoin. They love Bitcoin. They've, orange pilled, right? They're obsessed with this asset class. But it is the boomers and, people like myself, right? We're trying to help them understand this industry, this new asset class of the future, but also to get comfortable with it. Like, how do you add it in your portfolio? And obviously, they wanted it in an ETF wrapper. This was really important to that group. So again, a lot of people are talking about like there's 30 trillion that's managed by these advisors. So just 10 basis points of that coming in is 300 billion, right? So I think that there's a lot to be hopeful about, but it is going to be relatively slow for some investors, for that class of advisors that needs to get comfortable and to learn. And that's why podcasts like this are so important, right? We need to help educate this group of people that are looking at this and trying to decide, does it make sense in my portfolio?
And Steve, why did this relationship make sense with Invesco for you and your colleagues over at Galaxy Digital first? And second, any observations that you've had now that we are about a month or so removed from this big release?
Yeah, look, first of all, thanks for having us. One of the reasons that we did the partnership with Invesco years ago was really that it wasn't about Bitcoin or one asset. It was about a philosophy about technology and the integration of the ETF wrapper with technology and what that all would mean for portfolios. And so I think that philosophical underpinning has been there for years. Invesco has been a leader. QQQ speaks for itself. We felt like there was really not a better partnership to be had in crypto. I think a lot of crypto natives are arrogant sometimes. I think they think that, of course, because we can change the world with crypto, we can also distribute ETFs or, present globally, an asset allocation framework. And so we never felt that way as Galaxy. We think we're experts at some things, and then we're not experts at other things. And so the partnership made sense. We've had that model in other jurisdictions. It's worked really well for us. My observation on this, I agree, it's been a year and a month. Welcome to crypto is my message to Invesco and the others. That's how it's felt for 6 years. This pace is high. And I think part of that's the chasm that we have to cross between the expectations around demand and the timing of those expectations. The crypto natives are also saying, oh my gosh, if you don't have, QQQ-like sizes to the AUM in the first month, it must be a failure. We're saying absolutely not. Bitcoin's becoming more scarce, just as the demand is going to be going up over time from these platforms, from these RIAs. And so I think it's gone to plan. I think we expected the GBTC overhang to happen for a variety of different reasons. We're going to continue to see those trends play out. I'd be really surprised in a year or 2 years if we didn't say, wow, this is one of the most important ETF launches in the history of ETFs. Forget crypto.
Yeah, of course. And both of you and the companies you represent, I think, arguably are right in the center of all that. A question for both of you. Let me start with Steve here. Bitcoin is trading off of those recent January 8th highs. We haven't really seen that movement, that price movement in Bitcoin specifically timed to this release about a month ago. Steve, start with you. What's your sense on why we have not necessarily seen more movement in crypto prices since these ETFs first went live around early to mid-January?
Yeah, there's really two reasons. The first reason is you have a liquid underlying. So even when you've created new asset classes in the ETF space in the past, you've had generally an underlying that doesn't trade as freely as Bitcoin does. And so there's been some anticipation. There's never been more anticipation, I think, for an ETF. So I think that was reflected in the Bitcoin price in the fourth quarter. So some of that was priced in. And then you really have never had a dynamic where you're converting a $20+ billion fund from a closed-end structure into an ETF, where there have been bankruptcies that have held positions, where there are fee differentials, where there's fee wars on the other side. And so I just think all this is noise. And I think that the fact that Bitcoin is still where it is now, in spite of those dynamics, the run-up and the GBTC-led sell-off, is a really good sign for Bitcoin. So I wouldn't have expected us to be at 60 or 70,000 Bitcoin 1 month after a Bitcoin ETF launched. I think we're right where we're supposed to be.
And we're always trying to cut through the noise to find the signal. Kathy, your thoughts on pricing we've seen so far, or expectations you have for what the next few months may look like?
Well, first and foremost, I think Bitcoin is a macro asset, right? To quote Mike Novogratz, right, the founder of Galaxy. And I think that as the macro story starts to change and improves, and again, my background's 30 years of commodities, and I do feel like this is, Bitcoin is viewed a commodity, and it took a lot of time, right, for the adoption of commodities in people's portfolios. But I'd say, like, right now, watching the macro story, right, waiting for the Fed to lower rates. Like, I was not in that fan club of like, oh, it's going to happen in March, right? We're predicting, right, more towards the end of the year. But as the macro story improves, so will Bitcoin, but also the halving, right? And I think that a lot of younger investors who understand the halving, they're like, well, I have to make sure I have my ETF before the halving in April 2024. And so I'm now talking to, as I said, like the boomers and the older advisors, and they're like, explain that to me, Kathy. And I was like, okay, the people that are mining Bitcoin, they're going to get paid half as much. It's like, do they still want to mine? I'm like, yes, they do, right? But it is interesting because with that idea that once the halving happens, right, that over time, the Bitcoin has tended to go up over, so many days and so many months and even years, that I've noticed that there's some investors that want to make sure that they're in this asset class before the halving of April 2024.
Yeah, of course. And we reach that halving naturally around every 4 years or so. So like you said, we're coming right up to what would be about the next block allotment. I think it's 210,000 or so blocks in terms of the data. So we're coming up to that, and I think you and many others in the space are well positioned at a good time. Kathy, what do you think will drive more inflows for these funds over time? If you could kind of take a step back from even the time horizon that we're talking from January through the halving, let's go a little bit further out from that. Talk to me about some of the things that give you confidence that more and more investors will not only put their money into funds like this, but will continue to learn, underscoring the importance of just educating themselves about what all this means.
I think a great example of that was this morning, driving into the city, and I'm listening to the radio, and they're talking to a CIO of a major investment company, and they asked him the question, like, what do you think about these new Bitcoin ETFs? And he said, the days of putting my head in the sand and saying, I don't need to know anything about this are over. I was, I'm driving. I was like, what did I just hear? But it's true, right? I think CIOs across the world are all of a sudden like, okay, it wasn't in an easy deliverable wrapper, right? That people would be comfortable with. It didn't have that regulatory approval, right? The SEC giving it that stamp of approval. So now, and he said, this is another interesting thing. He said, I think it might take us 6 months to get approval, to really get our advisors out there soliciting and educating everyone. So, but that's why I think the call to all of the people listening to this podcast is you need to ask for these products, right? BTCO is our ticker, right? No one has the partnership like we do, right? We are a great ETF provider. Galaxy is an amazing digital assets expert, right? Together, we are unparalleled. There's no one like what we've created. I was like, but you have to ask for it, because many people, they will only take unsolicited, right? So that advisor can't go out soliciting. So that's why I'd say you need to create this revolution. While it takes 6 months for the advisors to get comfortable to add it to their platforms, you can start the revolution now by asking for these Bitcoin ETFs. And I know it sounds odd to say that, but otherwise we are all going to be waiting for the 6 months for the advisors to educate. Now, everyone loves to learn on the websites. So there's loads of information on our website, on Galaxy's website. We're sharing stuff back and forth in each other's websites. But, the podcast, you guys have a great, Galaxy has a great Galaxy Brains, every week I'm obsessed with, right? But that's the key, educating yourselves and understanding this asset class of the future. And so anyway, with that, I'd say, challenge, call your advisors.
So, Steve, to Kathy's point there, if a lot of it kind of needs to come from the investor, him or herself, right? Person taking an active role and saying, maybe these aren't necessarily being advertised to me, so to speak, in the traditional ways. I kind of need to roll up my sleeves and be a bit more active about it. Talk to me about how Galaxy is trying to position itself to go to people where they are. I can't help but notice that, a lot of these ETFs were very quick to roll out new 30-second commercials during the NFL playoffs. We got the Super Bowl around the corner. I sense more and more as these bigger cultural moments that the ETF offerings are trying to go to people where they are. What does that look like for Galaxy?
Yeah, look, I mean, first of all, it's not just educating yourself on what Bitcoin is. It's sort of why it matters and how it fits. And so the why it matters and how it fits is what we're really focused on. The why it matters, I think, Kathy covered well, the macro asset. Like there's a reason post-financial crisis that Bitcoin has had the best returns of any asset over a 1 year, 3 year, 5 year, or 15-year basis. Basically, throw a dart at the wall on a time frame and you have the same result. That's not happening for small reasons. That's happening for secular reasons. Like it's global, it's generational. So that's sort of why it matters. Why do you need the report card held against the system? Why does M2 track to Bitcoin? Like that's really, and that's what gets you to the conclusion that Bitcoin's a macro asset. Awesome. What do you do with that and how does it fit in a portfolio is still something that while we feel like we've been involved in that conversation, crypto can be an echo chamber, right? There's only 200 million people that own Bitcoin today. How many people have heard the story that a 1% allocation to Bitcoin reduces your risk no matter where you pull from, right? And how many people have seen a model portfolio that actually incorporates from a trusted, credible source like Invesco, Bitcoin in the context of a portfolio? Where do you pull from? How do you size it? How do you grow into that position? The tactics of that are what we're really focused on with Invesco. Super Bowl commercials are great. We're going to be, doing all kinds of different things on the marketing side. But I think at the end of the day, that's not really what's going to drive the dollars forward. It's going to be much more, like you said, rolling up your sleeves or helping people roll up their sleeves to understand those 2 points.
Yeah, absolutely. A question for both of you, but let me start with Steve. How do you think investors should go about approaching allocation in terms of the right amount of Bitcoin or for these ETF offerings to hold in their own portfolio? I understand both of you are very bullish on this, and rightfully so. But talk to me kind of how does this moment match both of your experiences in terms of people that are sitting there in good faith saying, hey, I want to get involved. I may not want to be overexposed to any asset class I'm not personally too familiar with, but I do want to have some skin in the game.
Look, we're fiduciary. Invesco is a fiduciary. We take that incredibly seriously. So as a starting point, it's not a one size fits all answer. But also, I think the challenge with getting off of zero is that it's very confusing when the price is going up to buy your first Bitcoin position, and it's very confusing when the price is going down to buy your first Bitcoin position. The psychology of Bitcoin means that you feel like you're chasing something that's at the highs or you're buying something that's going away. And there's no precedent for that. And so really managing an allocation framework in a volatile asset class and being honest about that is the starting point. I think when you look at the math, 1%, 2%, 3%, 4% are all helpful to your portfolio, but really the way you get there is as important. So I think getting off of zero is step one. How do you match the index, so to speak, of $1 trillion asset to a $400 trillion world? If you don't have 25 basis points already, you're short. You're short the Bitcoin index to the world just because you haven't done anything. Why is that? Is that because you don't like Bitcoin, or is it because you haven't done the work? So step one, let's get you there and let's dollar cost our way in. And then step two, let's talk about What's your macro view of the world? What time frames do you have? All the things that you would ask about retirement accounts, et cetera. And so you can get up to multiple percents. Some people say 10, 20%. Just because I choose to do certain things doesn't mean that everyone else should do that. But I'm not going to, use myself as an example. But I think that framework is where we start when we're talking at scale about it.
Kathy, your thoughts on allocation?
So that is great what Steve said, but I love. Really, it is about getting off zero. As I said, there's so many our advisors are, they lead with me with volatility. And I've grown up in commodities. So I said, do you know what the volatility was last year? It's 47%, right? I think that the average person thinks the volatility was like it was in 2013 when it was 120% volatility, right? So natural gas has almost double the volatility of Bitcoin. So I think the average person isn't aware of that. So again, we've looked at the math, we've done the analysis, and I use the royal we with Galaxy. And the number, like Steve said, is going from 0 to 1%. And the best risk adjusted is when it comes out of equities, right? Because equities is more of the riskier part of your portfolio. So, and I was in front of a lot of investors the other day. I said, do you think you'd really notice a 1% out of your equity portfolio? And they all looked at me like, oh, probably not, right? So that's where we say, like, when you get comfortable, right, you toe in the water, 1% out of equities, and based on the past 5 years of data, has shown enhanced risk adjusted returns. So we're focusing on the Sharpe and factoring in that volatility, not just returns. And I really have an issue when some of our competitors are looking all the way back from when Bitcoin was first created. And they're doing numbers on that and coming up with ridiculous asset allocations, right? This is a different world. It's now becoming it's not a mature asset class, right? But it is becoming more mature, again, with that volatility coming down, with further adoption. We believe getting off zero, getting to that 1%, and as you get comfortable, going up. Now, commodities, we've always said 5% in a portfolio, right? It's an alternative asset class, but it's almost those same criteria that make people want to have Bitcoin. It's a potential hedge for inflation because it's a finite amount of Bitcoin that will ever be mined, right? That 21 million. And so then diversification, right? Even though it's got a higher diversification to equities, it's still a diverse asset class. Then returns, right? All the young people, like, even though they've lived through crypto winters, they all have these amazing stories when they tripled their money or whatever. But that idea. And lastly, store of value. And I'm a believer in gold being a store of value. And I always joke, you can't take the gold, you can't take it out of the hands of a gold bug. But the younger generation, this is where they have their store of value. They keep it in there. They don't touch their Bitcoin, right? And I laugh because, like some young people have a full Bitcoin, right? And that's like $43,000 of wealth. So again, I think that as people educate themselves, they will get more comfortable with going to at least that 1%. And again, where our math proves that taking out of equities makes the most financial sense right now, based on all the data we've analyzed.
Steve, back over to you. What is your current thinking or your current argument? Why use a spot Bitcoin ETF as opposed to holding the actual asset in a digital wallet? And I suppose that the natural second question to that, Steve, is what gives you confidence that you're not going to have a lot of investors say, okay, maybe an ETF like this is the mechanism by which I dip my toe into the pool, but once I've gotten a taste of that, now I'm ready for what they might call the real thing, in air quotes here. In other words, now kind of dumping an ETF after 6 months of holding and now saying, okay, now I can go direct to a digital wallet.
Well, you've never seen this before, where there's both a new asset class and a new wrapper. So I do think the evolution to a tokenized wrapper over time is going to happen, and I think that's gonna integrate, and it's going to be very similar to mutual funds becoming ETFs and ETFs becoming tokens, and there's going to be a lot of benefits to that. It's going to take a while, and Invesco is doing work on that. We obviously are very focused on that, and so the end state of this has always been, if you did the 2x2 matrix of crypto underlying and actual, asset underlying, there's crypto wrapper with crypto asset. I do think that's where we land. I think given how regulated the financial services industry is, that's going to happen in a much longer term time frame than what the crypto community expects. Of course, to answer your other question, they're not mutually exclusive. I don't think everyone should hold Bitcoin in an ETF. I think there's a lot of people that for different reasons don't want to do that. I do think for most people, an ETF is the right answer. And that's, how many people who are in that, let's call it the boomer category, since it was Kathy's word, not mine. How many want to pay taxes separately? How many want to have multiple interfaces? How many want to risk private keys being held on a device that if someone, God forbid, were to take your phone or to do something nefarious, you wouldn't be able to manage that. So it really does come down to the cash under your mattress crowd or the gold being hidden somewhere crowd versus not. And I think this misperception that having an ETF wrapper is going to affect negatively the underlying liquidity of Bitcoin, I just reject that. I think the underlying liquidity of Bitcoin is going up. I think that ETFs being built on top of the Bitcoin network and the Bitcoin network being open source and being able to do more than just the ETF is a great thing for Bitcoin. And I don't think that's incompatible. So I think it really comes down to who's buying and why they're buying and what they want to accomplish. Those that want financial exposure to Bitcoin and ETF, 98% of the time is going to be the right choice.
Kathy, what most excites you right now about Main Street more and more warming up to crypto, especially in the form of these spot ETFs? And what are you seeing as part of that conversation that maybe the rest of us are not yet paying close enough attention to?
Well, I am excited about this, right? Because I feel like I've been orange pilled, right? With that whole idea that once you're on the Bitcoin or crypto train, you see value in almost everything. So the conversations are exciting with the advisors. They are all, number one, educate me. Number two, tell me how to put it in my portfolio. You ask the question, what is the asset allocation? And then what are the macro stories that I have to actually look out for, which I find really interesting too, because we've trained our commodity investors to watch different things like crude, like gold, right? And so now, and it's funny, you listen on the radio, again, you're hearing, this is what the stocks have done. This is what, the 10-year's done. Crude has done this. Gold has done this. Bitcoin is in there, right? Every day on every radio station. So it's getting more mainstream and I love it. And as, we all talk about talking to everybody that, in our social circles at work, constantly, this has changed this, the entire investor community, because remember, they wanted it in their portfolio. As Steve said, it's annoying when you're doing your taxes. This is not part of my portfolio. It's in the portfolio. It has that regulatory stamp now. So it is, again, I know it's going to take time and I have to be patient with that, but I think it's going to be a very exciting future.
Well, I know patience has been something that you both have needed for a long time, as we've all eagerly waited for Chairman Gensler and his colleagues at the SEC to finally, at long last, get us to this point. My final question is for both of you, and I'll start things off with Kathy. Talk to me about what you think may come next. Ethereum spot ETF, options trading for Bitcoin ETFs. Are those, or are there other products that you would like to see come to market? Kathy, to you first. So
it's publicly available. We've already filed for an Ethereum ETF, and we do believe that's the next leg. But again, for our partnership, we are committed to long term. We joke about this multiple decades of being together to be a part of this transition towards really developing this asset class with tokenization, with the options. Hopefully will be, normally for ETFs, the options start trading before the ETF is launched. So this is, there's been a bit of a delay. This will happen eventually, which should provide more liquidity to the market. But really, the sky's the limit here. And this asset class will be like when people first looked at computers or the internet or Apple, right? This is getting in at a time where we're about to see potentially explosive growth. That's important. And as I said, the 1% out of equities, it doesn't seem like a big bet.
Steve, how about you? What's coming next, or what would you like to see come next?
Yeah, look, so we're obviously very involved in the ETFs. We're also a $5 billion asset management platform. So we have this lens to the accordion. And when I look at every vertical of this, whether it's the venture side or whether it's the active management side, separately managed accounts are coming down the pipe at some point, the passive side. There's really going to be not just crypto strategies, but crossover strategies, right? There's going to be equity versus token strategies. There's going to be a credit way to play the space. And so what I'm excited about is when you compare it to the last bear market, so 3-4 years ago, there was no growth equity or secondary venture opportunity. There was no real hedge fund opportunity to speak of in the crypto space. There weren't ETFs, right? There weren't separately managed accounts being built in terms of infrastructure. So what I think now is this cottage industry of crypto asset management that's sub 100 billion in 3, 4, 5 years, that's going to be a 500, 600, 700 billion dollar industry. So I'm excited to be a part of that because I love the technology and we're active. But I think that part and parcel to that is financial infrastructure that evolves, wrappers that evolve, crossover and integrative strategies, and ultimately just a lot more stuff to do, and we're excited about doing that with Invesco.
Absolutely. Well, that much is very clear. Congratulations to both of you. Thanks for the time and the incredible context. My special thanks there to Kathy Kriskey, Commodities and Alternative Strategist over at Invesco, as well as Steve Kurz, Global Head of Asset Management at Galaxy Digital. Kathy, Steve, thank you both. Great to do this.
Thanks so much.
Thank you. Appreciate it.